Cheerio, Mike.
Yeah. Good shout. Hello everyone, good afternoon and welcome to today's Trading the US Open live here at the Live Trade Room. Now I'll just put that up on screen. So what we're currently looking to do is look through some of the biggest, most volatile and markets which have the most activity going on them, where we're looking to trade those effectively. Are we okay? We're all good, are we? Sorry guys, just looking at things off screen. So we're looking at the most volatile markets in the world, and we're looking at sort of 15, 16, 17 of those markets. And what we look to do is to identify high probability trading opportunities, look to trade these markets if the opportunities firstly present themselves. Then we go through a process of our ability to execute trades with consistency and discipline, making sure that we draw a line in the sand. We make sure that we know at what point we will want to get out of these trades, and that's all effectively a part of the whole management process when we trade these markets. So we want to take all these things into account with one aim, and that is to trade with profit. So without further ado, if we could start with our risk warning, as always, please do familiarize yourselves with the risks involved in trading these financial markets, and take note of our risk warning currently up on screen. Okay, so just before we begin, let's take a very quick look at some potential market moving news. Okay, let me see. So we'll have a look at Forex Factory for some developments that we can focus on for the session. We haven't had any major news impacts or news events of any kind over the course of the morning session. And we also haven't really had much moves in any of these major liquid global markets that we focus on trading. Hello Connor, good to have you on board. So look, we're hopeful we'll get to see a little bit of action this afternoon, because this morning's trading was not even that choppy, just uneventful, I guess, in many respects. So yeah, that's exactly what we're looking at, Connor, is the PPI figures at 1:30 today, and it's a monthly figure. It's expected to be 0.2. So we've been in a positive range for a couple of years now, bar a couple of minor sort of negative figures being printed, but by and large on a positive side. And one of the reasons why we like Forex Factory, of course, is that you can click on the information and get some information about the PPI number. So it's the change in the price of finished goods and services sold by producers. So, and this represents that change in price. So it's a indicator, of course. Production and manufacturing are important, very important factors when it comes to the health of an economy. So it does play a role. It's not a major significant event, but it obviously adds to the greater picture. So obviously, if we get a positive figure, it's likely to add a little bit of dollar strength, and if it's a negative figure, then it's likely to detract from the dollar a little bit. And the last thing we need now is more indecision, more sort of sideways, relatively sideways moving market, or effectively uneventful. Absolutely, Connor, as you say, a little bit on the sleepy side. Very difficult to get a foothold in some of these markets right now. So hi Lewis, welcome. Yeah, so you think we may get some movement, Connor, if we see a significant change in the core data? Yeah, but I suppose if we see a significant change, it doesn't look like we have that potential to see a major significant change But you could be right, and as a result we might start seeing some volatility. I suppose we're clutching at straws a little bit, and the reason why I say that is we'll go into the charts now, and we'll see how price is behaving, and we also have 330 crude oil inventory, so it'll be interesting. A negative figure is due out, which has the potential to support the price of crude oil, but we'll obviously wait and see what the actual figure is. The last figure, which was 4.3 last week, and now this week, as we look at this particular figure, we're obviously expecting a minus 1.3 figure to the downside. So it has the potential to support a little bit of price, really, if a negative figure comes in. But the problem we have with the crude oil inventories is they don't always work in a kind of a linear fashion, where if you get a negative print, it doesn't necessarily mean that price is going to push higher. In fact, you can get all sorts of variations off this number. So I think it does no consistent effect. That's a good way to put it. They are both inflationary and growth implications. So no consistent effect. So we can't always associate the price action with regards to the crude oil number. Okay, so that's a little bit on the news. So we might come back to the dollar at 130. So in the meantime, let's go into these charts and we'll have a look and see what opportunities may exist. Yeah, the CAD definitely does seem to have a little bit of strength coming into it, Connor, for sure. So yeah, we have the euro dollar. We're currently trading inside yesterday's ranges, between yesterday's highs and lows. So we don't have any major direction in this market. Certainly, it doesn't represent a high probability trade. There is this sort of mildly downward pressure on this market, but again, we like to trade within highs and lows, and obviously we're not breaking those lows to the downside, which would be the 1565. I mean, we're not too far away from it, but this is one of the most, well, this is the most liquid market in the world, and we haven't really done an awful lot for the last sort of 8 trading days. So that's kind of a good gauge, really, for the kind of the trading conditions across the board, really, as we look at these markets. It's been trading between the 1529 and just taking this simple high in here about the 1650. So we're talking about 120 pip range in 8 days, which is not an awful lot, considering there's a little bit of buying, a little bit of selling, a number of reversals. So really, that kind of sums up the market conditions that we're actively seeing across the board. Now, a market that was looking very, very positive yesterday, and it also looked very, very negative at one point as well. We're now firmly inside yesterday's ranges, so again, it doesn't give us a clear-cut picture. Same situation for the dollar yen. There is a slightly downward bias in this market, but certainly selling these highs don't really represent what's called a high probability opportunity. It is a tradable opportunity, not a great opportunity. That's probably how we should differentiate. The dollar Swiss is firmly trading inside yesterday's selling candlestick, so we'd like to see this market break to the downside, but since this market has opened, it's kind of only pushed to the upside. So again, it's kind of indifferent. It doesn't really give us a fantastic feel. Dollar CAD, yeah, you alluded to the fact, Connor, that there's a bit of strength coming into the CAD, and I suppose that's off the back of yesterday's move, really. We're not really seeing the continuation below the 30.44, which potentially could give us a high probability opportunity to the downside. But as you can see, we're currently above the descending level in this chart, and as a result, we have to trade what we see. So tomorrow might give us a bit of a floor in which to buy this market, but right now that opportunity doesn't represent a fantastic opportunity for us at this point, but things can obviously change pretty quick. The New Zealand dollar just rolling over to the downside, but as you can see, it keeps bouncing off the 6,500 level, and until we get a break of that, very likely to get a little bit of a pullback first before we get the next leg to the downside. So again, looking across all the dollar pairs, there's very little direction amongst the those that trade against the dollar, and that's what makes trading the foreign exchange markets right now certainly more challenging than kind of normal volatility. And normally when you get moves in markets, and you see what we've experienced is a number of rejections of lows or highs depending on which market you're looking at, and that lends itself obviously to a difficulty depending on your style of trading. So I suppose there's scalpers that may be successful in these markets, that ones that are getting in and out on really short swings, but what we look for, which is something we perpetuate over and over, is the fact that we look to cut our losers short, but we look to let our winners run. And we're very effective at cutting our losers short, so we want to get out of those at the first possible opportunity if it's not performing as per our expectations. Like a couple of trades we had this morning, they moved very briefly in our favor, reversed. The analysis behind those trades are stack up. They're fine with the analysis. We don't have any issues with that. Obviously, we didn't get any follow through in those markets. So just really that whole sort of turbulent, choppy price action, which we're seeing across the Forex pairs, just seems to be sitting and being a part of the whole kind of conversation for these markets right now. So we have the euro pound just hanging around these lows. Obviously a break below yesterday's low would constitute continuation, and there's a nice little move to the downside actually in this market if that happens, but right now not really getting all intraday moves on yesterday's highs and lows. So we're trading within yesterday's highs and lows across, I think, all of these markets, bar none. So hopefully that just indicates that it's just an opportunity for us to probably exercise a little bit of caution right now with some of these foreign exchange markets. The gold market is attempting again to sort of push lower. So we're in this market on a daily time frame for those of you that join our Capital Growth webinar. However, we've kind of been in a sideways move now for effectively 2 weeks really to the downside. So we still like this market lower, but obviously it's not moving with any significant volatility. This is one of the markets we were looking at this morning. If I just share the 5-minute chart with you all, there was kind of a head and shoulders pattern where we got this little move to the downside, but as you can see, it's reversed quite considerably. So there was a stage when this market was looking like we were going to begin to retrace yesterday's. No, sorry, it wasn't this market. It was actually the UK oil market. But effectively, it's the same situation where this market was rolling over to the downside, and we were going to capital on a little bit of retracement of yesterday's move. This was the market we were looking at. There's a triple top up here in and around this sort of 79.5 pound level. In and around this level, we were looking to sell that particular price action, but again we had a little move and then a really strong pullback. So on a 5-minute chart, I'll just share that analysis with you again. So relatively straightforward. Identify this as a really strong price point to see this market push higher, and as you can see, we began to fail that particular level, and now we were in profit for a certain bit. We had a nice strong move to the 78.55, followed by a really strong reversal back to these highs. So we are currently back to this level of resistance, give or take, but just obviously price action which is obviously not great. and really sharp, really significant pullback, and now it looks like it's rolling over back to the downside. So we've taken two trades on this market. The first one was a breakout of this level. We just marginally got traded out of this level, got into it just below, and placed our stop at the 79.10 level, just in at this level here above the 9700 level, and we've had a little break up to the 79.20 level, somewhere around that up here. So we're not breaking with any major conviction to the upside. There's still a downward pressure, but we're seeing sort of little mini structural failures even on a 5-minute chart. So it's just not performing as we would expect it to do. And certainly when we look on a daily time frame, there's still scope for this market to retrace, but we're going to go into the crude oil inventories now. So even if it does extend lower, the opportunity to capitalize on this move to the downside, we'd need to probably just exercise that caution really with this market now at this stage. So moving on then to the equity space, again, not an awful lot happening. We were expecting a little bit of continuation to the upside, certainly as far as the Dow Jones is concerned, and we got a little bit of move, but then like we've seen on previous days, we got that same kind of retracement kicking in, and actually these markets are looking a little bit bearish again, but you want these markets to kind of follow through. Excuse me, it was the Nasdaq market, not the Dow Jones that we were trading, but we were trading it above the 75.19. Again, we got a nice little push to the upside, and this market has rolled over completely. So not really follow through. Nothing going on in the FTSE, and equally nothing really going on in the Euro Stocks. So we're ultimately left with an interesting situation today. We'll see if there's a bit of volatility coming in to the US dollar, but we're left with a situation where we're not really seeing that many high probability opportunities across, like I said, the most global and liquid markets in the world. So there's clearly something going on. There's hesitation, there's maybe even a bit of fear in some of these markets. It's hard to tell, but certainly from a price action, it's been a really choppy period. We will switch over and just have a look at the dollar, the euro dollar perhaps. So what we're going to probably do today is to just keep an eye and flick through a number of markets and see if we get any responses. Normally at this stage we would be identifying 3, 4, 5, 6 opportunities, whatever the case may be. Today obviously we're struggling to identify one opportunity going in a direction in which we would have a high degree of confidence that we're going to get a successful outcome. And of course trading conditions yesterday and today have not been conducive for winning trades. So I suppose the markets are telling us to probably exercise a little bit of patience. Don't be too anxious to be getting into these markets unless we get confirmation and a situation for us to feel a little bit more confident about these trades as things currently stand. So I suppose the bottom line is we always have to trade the market conditions. And knowing those market conditions is obviously a trader's first port of call. Have an understanding of the market conditions, have a directional bias, and we're struggling with those two things. We're struggling with the identification of a high probability trade, and we're struggling with the direction. So those are always two very, very significant, very, very important factors to address when you're trading these markets. We're not in the business of jumping in and out of trades, buying and selling, and we like to have, of course, a more coherent, straightforward approach that you can understand effectively and can see unfold and hopefully make sense. And the idea is, the longer you're with us, Of course, the more experience you pick up, and there are certain nuances in many of these markets, and hopefully we'll reveal those to you in time. It's just obviously trading conditions yesterday, today are not really conducive for seeing those significant moves. So actually it's been an exercise in practicing really strong, effective risk management when we trade, which again is a very important skill. So let's get up the news event then. That's due out very, very shortly. There's not even that much news, impacting these markets right now. So we'll keep an eye on these then. We've got a PMI, a PPI, should I say, a producer price index data, and it's a monthly figure due out, and we also have the core PPI as well. Again, there's no expectation for really significant moves, and we'll have the news out in just a few seconds. So let's go into, let me just go into the euro dollar on a smaller time frame, and you can just see and experience how these markets can react to these events. So you'll see the impulsive move. What I'd like to do is just zoom out to see what's going on with this market. And so there you go. So we're seeing potentially some negative news coming out. So there's a little bit of a channel to the upside, but this has been such a choppy market. It's been up, it's been down, it's been up, it's down. So really there's a severe lack of direction when we're looking at this market. So what we can do is we know that there's likely, if the euro dollar is moving to the upside, it's likely to be a news event that's a little bit weak for the pound. So I'm quite happy to make some guesses. It's very likely for the PPI to maybe be 0.1 and the core PPI to be 0.1 perhaps. So let's just see. So there we go, absolutely spot on. Just looking at the price action really, and you can see the explosive move. It's obviously a negative figure. It's only 1 basis point, so it's not the end of the world. And if we look at these figures, you can see that they're all coming in and around that kind of level. So slightly less than what was anticipated. And the reason why we like these news events is that if that's the case, then you're likely to see it impact the US dollar. So not that it helps us an awful lot as far as having a direction in this market. Unfortunately, that's not the case. So it's not like this strength is sort of breaking new highs and we're taking out. We're seeing structural failures to the upside. It's unfortunately not that useful for us. A little bit of strength coming back into the pound dollar. Again, we kind of want to see this market break above the 30.50 level. It got very close to doing so today, but was ultimately unable to breach this level just up here at these highs. And as you can see, we then saw another 70 pip move back to the downside. So again, all of these sort of potential moves to the upside are being met with fierce resistance to the upside and also to the downside. So we're left with a very choppy range bound market. So currently a couple of structural failures to the upside now in the pound dollar. And yes, it is a tradable opportunity. Yes, we could get into it to the upside off the back of that news event. Historically speaking, the opportunities of a successful outcome are a little bit more reduced. So for us, we don't really need to sort of get into medium to low probability trades. Now if we break above the 30-50 level, that's potentially a different story, but then you're obviously prone to the fake out trade, the fake breakout trade, which is what we've seen a lot over the last couple of days. So yeah, the yen is likely to strengthen a little bit against the dollar. That's probably the only market. Dollar Swiss is retracing a little bit. So a sell trade below what would be today's market, but certainly to yesterday's low, a rollover to the downside below the 97.17 could give us a higher probability trade if we think that the dollar is going to continue to sell off. Dollar CAD just hanging around these highs again below the weekly low of the 30.44 would give us a good opportunity lower. The threat in the Aussie dollar that is going to push higher above the 71.31, but it's a counter trend move. We'd rather go with the market rather than go against it. No is the so looking at the gold actually, Connor, so good shout. So with the dollar selling off, we're likely to see the gold market strengthen a little bit, which is effectively what we've seen happen just over the last few minutes. So there's a number of these areas down at these lows that can provide support. And this is an ascending level that you can see it stacking up. You know, it provides considerable support, and this level has been sitting in this market for 4 months, but it still provides, you know, indecision and ultimately even breakouts to the downside off the back of that level, and that's exactly where we've come back to yet again. So extending lower, this becomes our interesting area to see if it breaks below the 11.93 level to the downside. But even on a daily time frame, we're still in a period of consolidation. So those are not really the conditions that we like to trade. We don't like to trade consolidation. We like to trade breakouts of consolidation. And unfortunately, a lot of these markets are being a little bit indecisive. There's a lack of directional bias. There's kind of a lack. You see, we know what we'd like to do with these two markets if we get that opportunity. It's just we might have to be really patient for that opportunity, and then you got to weigh up obviously whether committing that time is obviously going to be useful, and that's really why we like to focus on, you know, the first 2 to 3 hours of every trading session. There's probably very little point committing that much time over and beyond that. However, as I say that, I am very conscious over the last month that we've not really experienced the volatility during those sessions, which normally you would do. So that's kind of a nuance that we're kind of having to trade and having to deal with right now as well. So we're left with looking for sort of medium, at absolute best medium probability outcomes, and trading conditions like that always make us feel a little bit more nervous than usual, and you know, obviously there's a desire for us to trade all the time, but when you're not getting those opportunities, it's pretty difficult. Yeah, Connor, you're just suggesting a break of the dollar yen to the downside. Let's have a look at it on a 5-minute time frame. Yeah, so there's definitely this kind of a bit of price action to the downside. The only thing is, now we're at these lows. There's a lot of potential support around these levels. So, and we've got a really nice solid break to the downside as well. So yeah, that's the kind of trade idea, really, effectively. And this level's currently holding up price, so we are down at these levels here, but are we likely to get the next move to the upside in the short term? It's an interesting market, that one. And obviously the yen can become a bit of a flight to safety. So when you get these equity markets moving to the upside, you're likely to see the yen weaken, and when they become weak, you're likely to see the yen strengthen a little bit. So they're a flight from safety. So if you can imagine big flow of capital going from US equities, if that's the case, one of the safe havens, or the place where people go, is they look at the yen, and the yen can see an influx of capital, and it's likely to strengthen that yen, or the price of the yen. So knowing whether these markets are risk on or risk off is quite important because of the impact that they can have on the yen. The S&P, unfortunately, not doing anything. Neither is the Dow Jones. Neither is the Nasdaq. The FTSE potentially finding a little bit of strength. It can probably be argued, but we're kind of clutching at straws just a little bit, and nothing really happening in the Euro stocks. So the Aussie Swiss is not really doing anything over the last 2 or 3 days. It's interesting as well, the pound yen, that we're actually still below the weekly low, or last week's low, which is the 144.96. I'm just going to take this across, if that's okay. Yeah. So I'm going to get rid of this chart, and I'm going to bring this next to it, just because it's got the weekly levels in it. So there's clearly sort of a downward pressure being applied in this market, which is in keeping with the potential for a sell trade in this market. So you're always cautious of the yen, but it seems to align with the gold market. You're looking to trade it. Could be a nice retracement and preparing for a move lower. Like the sort of just to backtrack just a little bit. Obviously the gold market is crossed with the US dollar. So if the US dollar strengthens, the gold market will weaken. And if you're looking for the analysis or the comparison with the US, let me have a look at this on a daily time frame. With the dollar yen, then the dollar is stronger than the yen is stronger than the US dollar, and the dollar is mixed with it's crossed with the gold market. So and that extends itself to dollar weakness. So really that effectively should transfer itself as a bit of a bit of buying pressure coming into the gold market. So do be careful if trading the gold market. We do like it to the downside, and of course these correlations can unwind a little bit as well, so there's always that to take into consideration. We just want to, it's more of a case of just keeping a close eye on the dollar market, and the euro dollar would be a good starting point for dollar strength or weakness. And as you can see, the move to the downside is retracing quite a lot, so there's dollar weakness creeping in, which is likely to support the price of the gold market. Yeah, so I mean, of course, there's no problem necessarily in selling this market. We're just struggling for a really clear-cut opportunity. We have these levels sitting in this market here. We're currently just above those levels. We're only sort of 10 pips above these lows. So getting a nice flush down here, but only kind of a 10 pip flush to the downside. It's not excessive. It looks significant on this chart, but we got strong levels of support just below that level. So I mean, the picture recently is to the downside. So you know, this market might turn into one of these really selling candlesticks, which would be in keeping with the what's going on in this market. So if you're not already in this trade, if you don't get into the breakout below the 111.43, then it might be worth waiting for the pullback on this market. So we've created a bit of a low now. So we've seen the breakout trade to the downside. So we have traders looking to push this market lower. So now it just seems to be, will we get a pullback? And if so, if it comes back to this area here, could get another opportunity to get another trade off to the downside. But it depends if this low stacks up for us and what the remaining structure is on this market. Okay, so we're extending lower to the downside. So now we're getting some Japanese strength creeping into some of these markets now. So we do have these levels of support just beneath these levels down here. So we're not too far away from those. So just a little bit of patience really required today by the looks of it. So the New Zealand dollar is at a nice level on the 15-minute. For a sell trade or a buy trade, Connor, are you looking to buy above the 65.27, or are you looking at it to the downside, going with the bigger trend? Obviously, this is a strong level of resistance for the third time. Okay, yeah. So you're looking to buy it. So this is a strong level of resistance as things currently stand. This market's tried to bounce back to that many times and kind of failed on each occasion. So a strong break above this level could actually give us a good opportunity to push prices higher. So we shall of course wait and see. It could be the start of a really strong kind of pullback in this market, having extended considerably lower. Might get a little bit of a bounce back after these previous levels over here or something along those lines. Yeah, agreed. We'll have to see it move, yeah, through the retest, so you're absolutely right. And then that would be a bullish candlestick and likely to get a little bit more volatility coming into it. So can't agree with any of that, Connor, to be fair. I can't disagree, should I say. The pound got really close as well today, if I just show you on a 5-minute chart. So we were threatening to break above a similar level, the 30-50 level. As you can see on screen, we were hoping to break that to the upside, and we got a really strong rejection off it to the downside. So just remains to be seen what happens next. So we're getting a bit of pound strength now, so we're likely to see this extension lower. Great stuff, Connor. 5-minute reminder. Yeah, so look, we're not really getting much of the movement as such, are we? We'll have a look at yeah, so it's always good to see that the price sort of break through, and then if it comes back and retests that. So yeah, would absolutely agree. Like, this trade is probably the pullback trade. Once we get a breakout of resistance, is probably, on a percentage terms, probably the most successful trade to take, and it clearly defines your stop loss as well. So you know, if the market extends lower and then reverses back, then you're normally not committing as much. You have slightly more difficult decisions to make if you're trading the breakout trade. Yes, you're getting into the market earlier, but of course you have to deal with your stop loss placement. And you know, do you look at the most recent high, which is up at this level? Does it then make sense from a risk reward perspective to the downside? You know, you've got all these little questions to answer. So we do like the run up to a breakout to make sure there's the volatility coming into this market as it breaks through these markets, and that's what's happening. But we do have other issues with regards to stop loss placement. So we've got a few of these issues to deal with. Crude oil inventories are at 330. So that's the next news event. Are you referring to anything in particular, Connor? Yes, of course. Yeah. Sorry, I thought there was another bit of news or something that I was missing out on, but you're absolutely right. So look, we will look at this when we switch across to the live trade room now. We will absolutely have a look at this level in here, the 111.28. And you're quite right. If this is a proper breakout, then we'll see the market extend lower and then maybe look to get in on the pullback. Yeah. It's sometimes painful, and the office here is actually quite warm today, and sometimes looking at these markets, I might as well look at might as well paint the wall and sit there and start looking at that as well. So yeah, sometimes it's tough. And I've got a lovely 1-year-old as well that's doing her best to keep me on my toes every night. so yeah, okay. So listen, we're getting this price action just squeezed down to this level now as we see. Just a quick scan of the markets. Nothing happening in the euro dollar. Really choppy price action there in the pound. So trading inside yesterday's range. The pound yen is definitely a potential. So we'll see how this stacks up around this level in here. The dollar Swiss strengthening again against the Swiss, whereas we'd like to see it kind of roll over and reject those highs, but again, we're not really getting that follow through either. Same with the dollar CAD. Aussie dollar could be an argument like the dollar yen to buy the Aussie dollar if we get a break above the 71.31. New Zealand just moving sideways on a 5-minute chart, so this would be in a similar boat to the Aussie dollar. Just too much indecision really, isn't there? So difficult one, difficult. So euro pound creating a bit of a support of price in around the 88.95, and I mean, we're still inside yesterday's range, so again it doesn't give us a fantastic opportunity. The yen pairs look like they could give us the best opportunity. They're sort of edging lower. Currently getting this little breakout of here, but you're getting these sort of just large sort of spikes and these significant pullbacks. So we're getting that extension now as we're looking at this chart, breaking beneath this level. So we are below the 12900 as well as things stand. Let's have a quick look at the. So we're getting the follow through across the board. So so what we're going to do is we're going to switch across now. Then we'll allow these markets to break through, and we'll look to trade the pullbacks if we get some opportunities in some of these. The yen seems to be the only viable opportunity for us in today's trading. We're not really seeing much opportunity elsewhere, unfortunately. We do have crude oil inventories coming out as well, so just rejections across those two markets and nothing happening as we look across. In fact, a bit of selling potentially coming in as well, so retracing all of yesterday's sort of bullish price action. So we're not even getting the pullback, we're not even getting any follow through on the pullback trade as well, which is sort of getting in at these levels to push this price higher. So just not wanting to conform by the looks of it today. So look, we have these days when we trade these financial markets. So when we switch across now to the live trade room, we're going to focus on these yen pairs and see what sort of follow through we get. So now is probably a good time to we do really want to see a pullback in this market before we get into it, otherwise we have issues with regards to our stop loss placement, and we don't want a 30 or 40 pip stop loss on this one. So let's switch across then to the live trade room. Those of you that, you know, please do give us a thumbs up. I mean, this has been the most exciting of trading sessions ever. Very limited opportunity this afternoon. So if you can give us a thumbs up, please do subscribe to our channel. Also, if you are interested in joining us here at the live trade room, we have over 76 live trade rooms every single week, so hopefully you can join us for those, and you get 2 weeks free trial without any cost whatsoever. And then if you decide to stay on with us, it's only $9.99 per month to access these live trade rooms. So hopefully you'll find it incredibly affordable, and the details are just below in the details box. So hopefully we'll see you join us over at the live trade room very shortly, and we'll make that move now. So from everyone here at the live trade room, take care, and we'll speak to you soon. Bye for now.